Hi, I'm Elaine Bechtold, founder of Money Measures, educating people who are new to budgeting and educating young people about healthy habits when it comes to how we handle our money is the reason for doing this video. You have probably already heard that spending less money than you make is a great plan to have when it comes to how you handle your money. What you might not have heard are about the things that have tripped people up when it comes to spending money that have landed them in debt rather than being able to live within their means and spend less than what they make. The purpose of this video is to show you how to create a budget using our web app, while at the same time showing you how you can use it to avoid those situations that can trip you up. One thing our app cannot control, however, that can definitely trip you up, and that's your choice about whether to say no to the things that you want but don't necessarily need. I hope you enjoy watching this video, and I do hope that you learn something from it that can help you when it comes to your personal finances. This is the home page for the web app. This is what it will look like if you have no budget files created. There are links here to pieces of the help manual. Anywhere you see this logo when you're in the web app, click on it and you will always be returned to this home page. I'll create a file so you know what it will look like. So this is what it looks like right after you create a file. Clicking on the logo, I return to the home page, and here's the file that I just created. I'll go back into the file to start adding incomes and expenses. And there are a few things that can trip people up when it comes to handling incomes. One is counting their chickens before they are hatched, and I'll give an example of how to prevent that from happening within the web app. Another is not factoring it in if there is money in the bank that's on hold. And the final one is planning to have more money coming in than what they can truly expect. So even if somebody has steady income, it could be it fluctuates just that little bit each week or every few weeks. So rather than plan on what you're hoping will be there, plan on whatever the minimum is that you can reasonably expect. So we'll say in this case, it's 1,100 each week. So some weeks it might be 1,120 or 1,150, but the minimum they can expect to receive is 1,100. Because what you can do is customize it so that when you get your pay stub, if you will actually be getting that 1,150 instead of 1,100, you can actually change it. And the other thing that I talked about, money that's on hold. In this situation, I'll say that the money will be in the bank and no hold on it on a Friday. So it could be the person gets paid on a Tuesday, but the bank holds it for 3 business days. So I'm putting in here that the person receives it on Friday. That's when the money will actually be available for use. And then I'll still put in the minimum that's expected. But if there are times of the year that somebody makes more money, either doing overtime or maybe there's a bonus that gets tacked on to some of their pays, a tax refund, I'll use this one to talk about not counting our chickens before they're hatched. And again, putting in the minimum that the person can expect. So history shows that this person gets back a minimum $650 as a tax refund. And rather than say, I'm going to be hopeful that this will be in my bank account by the end of April. Instead, if there have been times it's been paid as late as June 30th, then put in June 30th. So that's showing a couple of incomes that I've added in. Go to the overview screen to see what it looks like for income. So based on changing those few weeks in December and based on the tax refund, this is what would be expected in income between March 22nd, 2022 and March 21st of 2023. I will now move into adding some expenses. Short-term budgeting in general can be a problem when it comes to budgeting practices. And I'm thinking specifically about taking a look at what your upcoming pay will be and the expenses that you have to pay from that income. If you've forgotten about an expense or you've forgotten that an expense will be more, then you can find yourself playing catch up and possibly having to turn to making purchases on credit. But it can really show up in terms of expenses. And something that can be done within our web app is to customize payment amounts. So you'll start to see how long-term budgeting, how it is possible to do it, and that it can prevent some of the problems that can trip people up. So the rent payment, April 1st. And in order to do the long-term budgeting, it has been built in that something like rent, whether it's a mortgage payment or rent, you can put it in that it'll go on forever. That you're basically expecting it to be payable indefinitely. And by customizing it, in the case of rent, if somebody's rent payment will be going up, say right now the rent payment's $1,100. But they've been given notice that their rent payment will be going up to $1,127 in July. And then if they receive notice again next year, they can go in and change this. And another example is hydro. If you're doing the short-term budgeting, you may be using the law of averages and just putting in the hydro bill, usually averages somewhere around $60 or $70 a month. But again, using customized amounts. The summer's coming up, and say the June bill is the first bill that tends to be more because of running the air conditioner. And then get a break for a couple of months, and then it kicks in that the furnace is being run. The buy now, pay later option for making a purchase can definitely cause problems for people and trip people up. You have every intention of putting the money away, making sure the money will be there, whether it's a year from now or 18 months from now, and somehow that time period can come and go and the money still isn't in the bank. So the buy now, pay later. And it'll be something you're under contract to pay. So I'm going to refer to this as other financial obligations. You did the 12-month option, which means $1,200. You want to be putting away $100 a month. And in this case, instead of saying it goes on forever, because your plan is to be keeping this money for a year, the $100 a month for a year. So in this case, can say that the last $100 payment to be saved is the March 1st of 2023. Not doing a check-in regularly about how much things are costing can also become a problem. Let's take groceries, for example. Say somebody's been spending $75 a week. And then money seems to be going out faster than what they figured it'll be going out on. And then they realize that, when I'm going out getting groceries, it's not costing me $75 anymore. It's closer to $100 that it's costing. So keeping a handle on that. Being realistic about travel plans. and based on when you'd actually be paying for things. Maybe you're getting an all-inclusive deal, planning to pay for it at the end of May, even though you might not be taking the trip till the fall. Another common issue people can have that cause problems and that's the whole thing about expenses that get forgotten about, they get missed. And we have 3 features built into our web app that deal with forgotten expenses and trying to help you not forget about them. One is a selection list that you can take a look at, see if anything jumps out at you that you haven't added that you need to. Another one is a checklist. So based on the expenses that have been added, going through and same idea, is there anything that jumps out at you that's missing from here? And the other one is the forgotten missed expenses piece. I put in a car loan. That's all I put in as far as a car goes. So what it will do, so because I put in an auto loan, it'll give me a prompt about adding gas, adding some expenses to do with the car insurance. So those would be things, and you can actually add them right from here. So those are some features that are built in to help you miss less, because it can definitely be a problem if you've forgotten expenses, especially if it's a big annual one, such as car insurance, if you don't pay by the month. So the annual payments can definitely be a problem. Couple of final notes when it comes to expenses. If somebody rents, then it's a case of whatever your weekly pay or your biweekly pay is, will 1 week's pay or your biweekly pay cover the amount of rent? If it doesn't, then it's a case of setting aside so much money from each pay to go towards rent. And the other note about expenses, whereas on the income side, plan on whatever the minimum is so that you're not counting your chickens before they're hatched. It's the opposite when it comes to expenses. You should be putting in your maximum amounts, and then if a bill comes in and it's not as much as that, then you've got extra money. So just like on the income side, if you have more come in, you can have a plan for how you'll spend it. Same idea with expenses. If you plan for the maximum and the bill comes in, it's $100 less or it's $50 less, then you'll have an idea what you want to put that money towards. So those are a couple of final notes on expenses. And then if you like to see things in terms of how much money you're spending on needs-based spending and how much you're spending on discretionary spending, you can actually assign your expenses. So an automobile loan, you're under contract to pay it. It's definitely an essential. The buy now, pay later, you're under contract. It's you need to pay it. Now there's not a full list of expenses that have been added here, but it gives you an idea. So in this case, of the $58,350 that will be earned between March 22nd, 2022 and March 21st, 2023, there would be close to $30,000 going out on needs-based spending, and that travel, $3,000 on the discretionary spending. And the other thing it's done, some people like to look at their spending in terms of what category it falls into. So there is a report on doing that. So now I'll move into the different reports that are available. So I have covered off the checklist already. So now I'll move into showing some of the other reports. Once all the expenses are entered, here's what it's looking like. So overall, between March 22nd of 2022 and March 21st of 2023, there would be $1,270 spent more than what's coming in. So that's what this tells us. And the spending is based on categories. Looking at the monthly report, there are some months that are more heavy on spending than others. So it's one way of taking a look at things. You can go month by month to see what things are looking like as far as money coming in, money going out. And it's also showing this representation. So a bar graph, money in versus money out each month. As far as making decisions go, there are different ways of looking at the information. And this report can actually be customized. It's called annual. But if you want to know a particular time period, you can actually put in a date range to look at a specific 6-month period, 1-month period, 3 months, so on. So in this case, there's more money being spent than what this person would like. So one way of taking a look at the information is based on categories for spending. You can go through categories. You can also look at it from a needs-based spending point of view versus a discretionary spending point of view. You can take a look at the discretionary spending, see if there's any changes that can be made there. And if that's the other option, if enough money can't be found within the discretionary spending that somebody's willing to give up, then another thing is taking a look at the essential expenses, but taking a look at things that might be under contract to see if it's worth getting some quotes from different suppliers, from different service providers. That's one thing that can be looked at as well for looking for changes, looking for reductions in spending. And And the other report is the cash flow report. This is the one that you can actually look for those chances to really target in on certain areas, either to save on spending or to look for money that's available to save if there's more money coming in than what's being spent. So in here's where you can put bank balance. So we'll say the current bank balance is $675. So it's showing what this opening bank balance is and what would be left. So even though there's more money being spent than what's coming in, at least that's what it's showing at present, because of this much money being in the bank, the person wouldn't be going into overdraft by the time it's all over. Not at the end of things, but looking through things in the short term, there's some problem areas where there'd be an overdraft situation. And in this case, a lot of May would be spent in overdraft, and so it'd be a case of going through and seeing if there's certain areas specifically, possibly, that spending can be reduced. So that's another way of taking a look at things, to look for specific areas. And is it a case of changing around timing? But in this case, if the person's overspending for the year, then it would be a case of finding specific spending reductions. So we'll take a look based on categories and say maybe we have to plan on spending a little less on let's say instead of spending $3,000, we'll plan on only spending $2,000. One way or another, we'll make it happen to only spend $2,000 instead of $3,000, which gets us closer to where we want to be. And maybe we have to take a look, $1,900 going out on gifts. So taking a look at that and saying maybe we have to cut back. So right now there's $1,900, working it out somehow. To spend less there. I need to cut back a bit more possibly on those gifts. So at this point, there'd be a bit more money coming in than what's going out, still cutting it close, but taking a look at that cash flow forecast. So because of starting with 675, it would be finishing with more money coming in than what's going out, or sorry, with more money in the bank than what it started with. But going through, there would still be things to work out because right now it's still showing some overdraft situations. So that would still mean buying on credit. So even though it's worked out that there'd be more money coming in than what's going out, there would still be potential areas in there that credit would be needed or going into overdraft. So those are the kind of things that you can be looking for within this software to make things balance out so that you're spending less than what's coming in, living within your means. So it gives you an idea of what can be done within this software from a budgeting point of view. If you create an account, and you have questions either about how to add information, change information, or wondering how to exactly use the reports, how you can use them to change your budget, work with your budget to end up in a more favorable position, please do give me a call. It'd be great to talk to you and great to answer any questions that you have. All the best.